am very excited for the CPI print tomorrow. Again, we have headline expectations coming in at 5.2, which I think is wildly low. Kind of sets us up for a negative surprise. But as you will just see in this episode, it is actually the core CPI that I think is a bigger story. So let's get into it. Let's talk about the daily financial news. First and foremost, it is in, it's complete, the money is gone. The California Dream for All was fully allocated in 12 days, fully reserved, if you will. We've gotten some numbers. I want to give a shout out to Matt, the mortgage guy, who collected these numbers. It appears that the California Dream helped 2,564, I'm going to say families, individuals, buy their first home. There are 2,564 folks in contract right now that the state of California is putting 20% down. The average down payment is $112,000. So again, as we've talked with mortgage lenders, mortgage brokers, this was really the deal, right? Let's have somebody come in this case the state, come in, put 20% down, a silent second, zero interest, zero payments, and you give 20% of the upside in the future. It appears that that is going to make more affordability, all of these things. What I fear, and I think we will see over the next week or so, assuming reporters do their job, which today's day and age is an assumption. Hey, Brian, thanks for the super chat. I appreciate it. Is how many people were frustrated, disappointed, think it's a scam, what all of these things, right? Again, I have to imagine just the activity that I saw in 12 days, there had to be hundreds of thousands of people wanting for this, shopping for a home, but it was gone just like that. 12 days, fully allocated. Looks like we've got Sacramento, California, with the highest concentration. It appears that 11% of the total was in Sacramento. So what would that be? That would be like, what would that be? 275 of the purchases will be in Sacramento. 9% in LA County, followed by Riverside and San Bernardino. Again, relatively speaking, kind of cheaper parts of the United States. I did a little bit of math and I backed into the average purchase. So we know the down payment was $112,000. So if you use that as 20%, that means the purchase price was around $560,000. So again, kind of makes sense. Sacramento, Riverside, San Bernardino being the highest concentration. So again, pretty interesting to see. Will it come back? I mean, in reality, my opinion, this program could be almost unlimited and it would be used. I'm not saying it's a good idea. If you heard that, that's not what I said. It's just more demand, which we need supply, not demand. You've heard me say that. But again, there's a lot of people, probably hundreds of thousands of people that wanted to get the state to fund the down payment. And again, 2,564 did it. Everybody else, at least currently, not yet. Let's talk about Bitcoin. I don't know if you watch it. I think it was 2019. I moved 1% of my net worth to crypto. I've told you it was an insurance policy. I don't look at it. It is still an insurance policy. I haven't bought, I haven't sold, I won't buy, I won't sell, but I have it, right? It's an insurance policy. That's what an insurance policy is. It does look like Bitcoin just crossed $30,000 yesterday, and last time I checked, it was still there. People running to, Bitcoin, it seems like. It looked like Ether was up to nearly 2,000 as well. So again, for those of you out in the crypto world, you have had a very good run here recently. So congratulations. Next up, a lot of talk has been talked about builders going bust and all of that. And as we've talked about on this channel, it's not coming. In fact, this year is a perfect setup for builders. They have less competition. They have the financial wherewithal to slow down, i.e. control expenses. And instead of lowering price, builders can buy down rates, and you are seeing builders post ever increasing better numbers. And on top of that, you now have builder cancellation rates below 10%. Why is that important? Well, first off, you undoubtedly heard channels talk about builders having 60% cancellation rates. 60. That is unheard of. And that is what happens when rates go to 7%. But now, a short 4 months later, 4 months, cancellation rates are sub 10%. Right? Rates are coming down. They are using their balance sheets and financial flexibility to do rate buy downs and the like. So again, cancellation rates today are 9.3%. Yes, 9.3. In 2019, again, pre-pandemic, they were 10.5%. So again, we are below cancellation rates. Again, I believe builders will pick up market share and do quite well all year, especially if they focus on entry level. Entry level is where the money is at, where the demand is most feverish. So again, something to watch there. Lots of stuff going on in the housing market in general. Second home mortgage demand has collapsed 50%. 50% already. There is likely more downside. So what is a second home? Now, a lot of you, myself included, when I hear second home, it's the rich people buying a lake house or a mountain house or all of that, which is still true. However, if you've been in the game long enough, you know, because you watch the data, that second home mortgages were very, very common for Airbnb purchases. A lot of you, or a lot of buyers, took the loophole of a second home mortgage, which at the time was below investment loans, and you bought Airbnb or short-term rentals. That is drying up. There is pain in the Airbnb market. We've brought that to you for 9 to 12 months. People did not buy the right locations, the right qualities, all the things we've talked about. We've had 2 great years of demand, but the numbers were fake. So again, what you are seeing is the second home, and I believe Airbnb or short-term rental market suffer as people back away from that business. So again, it is the lowest level. Not only is demand down 50%, but it is the lowest level since 2016. Again, some of this is very regional bank. Again, regional banks made up a lot of the demand there. So again, watch that going forward. Altos Research. Again, folks, I share with you my sources and my follows on Twitter because, again, Twitter puts out a lot of great data. Altos Research is worth a follow. If you follow them, tell them you came from One Rental at a Time. I want to interview Mike from Altos Research. So if you are on Twitter and you follow him, tell him, hey, One Rental at a Time, would love to interview. I have reached out. I haven't heard back. But Altos Research, 18% fewer listings last week. They post data week on week, so 18% fewer. Last week, if memory serves, new listings were down 23%, so maybe things are getting better. 25% of new listings are in contract in under a week. So not only are new listings down, but they're going really, really fast. So that is the market we are in. And again, as you will see with Ryan Lundquist, Sacramento appraiser, we are seeing a clear delineation. Below the median, just roughly speaking, a lot more demand. Here's the deal. Again, please do this research in your buy box in your market. This is Sacramento. Again, full credit to Ryan Lundquist for the data. I am just sharing what he shared. First off, in Sacramento, the median price is about $550. $550. He just put out a chart where it was 500 and below. So not quite the median, but close enough. There are 187 active listings in Sacramento. Guess how many pendings? It's a wild number. Pendings, 503. So again, if you look at overall Sacramento and you include the multi-million luxury homes, your days on market, all of that might be 45 days. However, if you do what you and I talk about almost every day and you focus on entry level, we're talking what? 7 days, 10 days, 12 days of inventory. The housing market has almost never been this broken and this bifurcated or bipolar or whatever that word is. It is wild. But again, we talk about the nation. We talk about specific markets. Please do the research in your market. All real estate is local. Please know your buy box, your median price, all of those things. So I don't know if you saw this. I meant to talk about it yesterday and I didn't. One Rental at a Time is now identified as a top 20 podcast. Yes, I don't know if you know this, but these videos actually get stripped of the video and the audio is published to a podcast called, of course, One Rental at a Time. It was selected as a top 20 podcast by, I already forgot the name. I will post the link below so you can go check it out. But again, a top 20 podcast for new real estate investors. So I want to thank you for that honor. Truly a pleasure bringing you this stuff, talking every day. Thank you for all of the support. Again, to be a top 20 podcast, something I never thought or even thought was possible. So pretty cool. May 13th. I don't know if you know this. I've only talked about it once or twice, but I am being a part of the next live real estate investor event in Fresno, California on Saturday, May 13th. Hey, Maddie, thanks for the super chat. I appreciate you. And the reason I have to do this, folks, is I can't see my screen. So I have to lean in. Eyesight's really bad. Anyways, May 13th, Fresno, California. We're going to do a full day Saturday event. We're going to bring in a couple of rock stars. I will be speaking, Jason Pritchard, Dean in Stratton, friends in Fresno. If you went to the last one, you know how fun and exciting that was. I hope to see lots of One Rental at a Time fans there. I will post a link again. All day event. Ask anybody who was there at the last one. 600 plus people. We will do that again. Tickets are on sale. I think they're $97 for a full day. Again, I'll post a link below. And then finally, we have back-to-back events coming up on this channel on Sunday. This Sunday, we have the 4 Legends of Real Estate Investing. Still have some seats available. And don't forget, the next Sunday, you're going to get to talk with real estate agents. How do we work together? How to get the attention of a top 1% agent? How can realtors grow their business? I'm equally excited about the next Sunday, which will feature Beth Traverso, Jason Pritchard, and Ty, or TYLG as he likes to go by. So again, look forward to more interaction and education. Why is this important? We are in a recession, in my opinion. Recessions are the time to get good at your thing, whatever your thing is. We have to get around people doing the work, who have experience, who have been through the wars before. If you are not asking Anna, April, Casey, and Alicia about going through a recession or opportunities or what they've changed in their business, you are missing out. $47 to get millionaires and multimillionaires to answer your question is something you can't miss. And again, you're going to get the video afterwards so you can watch it again or watch it in parts or whatever you want. So again, all of those things, I'm investing in you. This is something I wanted to do post my trip to Southeast Asia, is do more things where you can ask questions of people in my Rolodex. So I look forward to seeing you there. Now let's talk about core CPI. We've already talked about CPI headline going from 6 to 5.2. I'm calling 5.4. But what most of you may have missed, this is important, is core CPI is expected to go up. Up. Core CPI last month was 5.5%. The expectations are for it to go up to 5.6. Folks, let me just tell you a secret. That's not good. If you get headline shows 4.9%, but core inflation shows 5.7. No pause. The Fed will raise. Again, the Fed tells you all the time, watch core, watch core, watch core. So again, a lot of people may get excited if it comes in at 4.9 headline, but don't be surprised. It's the core number. Core, again, I keep telling you, housing's not rolling over until July or August at the earliest. We still may get a super hot housing read. Yeah, tomorrow's going to be wild. People are going to get distracted by the headline number. Even if headline comes in at 5.2 or 5.3. Think about it. Think about how nutty this is. Headline inflation is expected to be 5.2. Core is expected to be 5.6. I have to go back because I don't remember a reading where core was above headline. Think about that. I'm sure it has happened. I don't think it's happened very often. I'm going to have to look that up. Core is expected to be above headline. Watch out. The Fed's not done. We're getting another quarter point May 3rd, in my opinion. Earnings season. So what am I expecting to see from earnings seasons? We talked about banks yesterday. Let's be a little bit broader, right? What am I looking for from earnings? I want to hear any talk of the supply chain or of commodities or any input costs lowering, right? You and I have undoubtedly seen commodities roll in. Are there other things like shipping and warehousing and trucking? Are people seeing, right, disinflation or perhaps even deflation? Second, I want to hear if anyone, and it's probably retailers, did anybody see a drastic change in March? I think there's going to be a lot of people that said, wow, January and February were surprisingly strong, but gosh darn it, March sucked. I'm looking for that in earnings because, again, I'm putting myself out there. I believe the recession will be flagged as Q2 because the consumer broke. 3, if you are in tech, specifically software tech, I believe one of the things you are going to hear is longer sales cycles. That is code for our pipeline is breaking. I did this for 20 years. I think what you're going to hear from software tech is longer sales cycles, higher levels of approval. That is all just gobbledygook for their pipelines are busting out. And then finally, I want to hear from folks like Cisco. I want to know about the world. There are a few companies that report numbers geographically. I want to see if the US is a bright spot, is like anyone else, or perhaps performing worse. What is going on with China in the great reopening? I want to see what's going on in the world. So those are the things that I am looking for in the upcoming earnings season, which runs the next 3 or 4 weeks. It is going to be very interesting. And of course, lastly, do earnings come down? We've already had 2 quarters in a row where earnings were lower after earnings season. Will this make 3? Because I think a lot of folks are going to go, woo, things have changed. So again, folks, lots of stuff going on. And then lastly, I have a request for you. I have an opportunity for you to be on this channel. I don't think it goes without saying that I am particularly proud that One Rental at a Time brings you millionaires and multimillionaires each week. I'm proud of that. I think that makes this channel unique. But I thoroughly enjoyed my Sunday conversation with brand new investors. If you go back and watch Sunday's conversation, we talked with new investors in Florida who bought their first property. This was a wonderful trio of investors, and we got to hear their questions. So I want to throw this out to the world, or out to you, the viewer. If you are a new investor, if you are looking to buy a home and frustrated, I want to do a 30-minute conversation with you wherever you want to go with this one caveat. It must be recorded, and I must be able to post it on this channel. I'm not having free conversations. But if you want to have a conversation with me, tell me your story, your frustration, answer your questions, I want to do a couple of these. So what I would ask you to do is go follow me on Instagram or Twitter is probably the best way, and then message me. Tell me you're interested. Give me a little bit about your background. Remember, I only record Sunday through Thursday. I don't record Friday. I don't record Saturday. from 8 a.m. to 11 p.m. Pacific. So I look forward to hopefully dozens of opportunities to talk to new investors about your story, your issue. But you got to fit my area. Sunday through Thursday, 8 to 11 a.m. If you want to be a part of this and you are okay being a little vulnerable, I want to hear from you. Folks, again, One Rental at a Time is trying to be different. It is trying to help you. Like, subscribe, comment, share the channel. Go check out the podcast video. We're top 20. So cool. Have a live event in Fresno again, May 13th. I have some millionaires coming the next 2 Sundays just for you. I'm trying. I'm doing my best. Have fun. Like, subscribe, comment. Take care of yourself. Have an amazing day. Bye-bye.